Hello, I'm Melinda Hereford here with Kate Willeford. Hello and welcome, Kate.
Hi, Melinda. It's great to be with you again.
Great to have you. You know, Kate is with us from the Willeford Group, and she actually, it's pretty cool. She has a remote business, CPA business, representing over 300 clients in 26 states. Kate, is that right?
That's right,
That's
it is.
pretty
And
remarkable. Nice job on that.
well, thank you. I really believe in the importance of quality of life for my team members. So we've actually been virtual for over 3 years now.
Beautiful.
So our employees work from home in 5 of those 26 states. So it's a nice way to be able to help as many dentists as possible across multiple time zones.
Oh, it's incredible. And plus you're an industry leader, Kate, because you know you're ahead of your time. This, aren't you? You were all
Well,
set.
that is true. And actually, when everything happened with the pandemic, we were really very lucky to have already had this in place and the technology in place so that it didn't affect us as much as it did other CPA firms, because for us, it was rather business as usual,
Yep.
working from home, but then of course, adding in all the new topics and the research. So, adding a pandemic to tax season makes for some extremely long hours for a long period of time.
Absolutely. You know, I just want to acknowledge you. You know, you have been an industry leader in this pandemic and helping us understand really what was available for loans and now actually how to navigate these loans. So thank you so much for all your hard work and helping these dentists really navigate and figure out the best way to track all this stuff and to maximize these loans. So thank you.
You're very welcome. And as you and I have been talking about, the loans have become so important for so many doctors who just didn't have money saved up for some type of business interruption. So it's been extremely difficult because this pandemic really closed almost all offices seemingly overnight. But I think it's important to think about short-term and long-term cash flow on an ongoing basis and really be prepared for any type of business interruption. I mean, you've seen it firsthand how much of a difference it can make in collections when we lose the key front desk person, or when we lose a key hygienist, how much that affects the production and then the following collections. So I think that this period of time is a good reminder to all of us business owners that we always need to be prepared with an extra savings plan and a strategy for something that affects our cash flow for multiple weeks on end.
You know, I'm a little bit embarrassed, Kate. You know, I have always, I mean, I've been consulting for a very, very long time, and I have espoused to, wow, revenue is great. That's great because I pay attention to revenue. And then I look on the P&L and I look at net income. I go, wow, that's great. That's awesome. But then I have doctors say, well, how come I don't have any money? And so this is a time where that third component. So we have the income statement, we have the balance sheet, which is what we owe, right? And then we have something called cash flow statement. So I have to say I haven't always used cash flow statement, in fact.
Sure.
And, you know, but I know you do. And I know you've helped your clients, which is really in normal times understand the money that comes in, the money that goes out, and the money that's left over, and really on a, you know, now I think it's even more important on a daily basis, what's it cost to keep this business afloat or
That's right.
operational. So can you talk about, I know even when we think about this pandemic, you know, you're starting to activate this cash flow management again with your clients. Can you highlight what you're looking at right now and what your recommendations are for cash flow at this time?
Sure. And you're not alone, by the way, in not looking at cash flow statements. In fact, most CPAs do not even print a cash flow statement and certainly don't discuss it with their clients because it's not something that you need for a tax return. So one of the reasons that I've always included it in our financials, even my dad did starting 45 years ago when we started our company, is because I'm a business owner myself. And I know what's most important to me is that I make cash or did I lose cash. In a sense, you don't really need to care too much what your net income is because that does go to a tax return. But as long as you can trust that your CPA is calculating that correctly, you really want to know what your cash flow is. And that comes from that cash flow statement. The reason that's unique is because it's combining the expenses that are deductible that show up on the profit and loss statement, but it also combines the flow of cash that doesn't ever hit the profit and loss statement, and that shows up on your balance sheet. Typically what we find is that is affected because you have the loan payments that you're making, and the principal portion is not deductible, so that stays on your balance sheet. And also you have some changes such as depreciation. So it's very typical for my clients to ask me why we show a smaller balance in their cash account and their checking account than the IRS believes is taxable. So there's always a discrepancy there, and it's because of this balance sheet effect.
Beautiful. Yeah, so it's easy. You could have the idea when you look at that income statement that everything is hunky-dory, but it doesn't include all those loan payments. And so when you're working with your clients, like right now, what's your recommendation on this cash flow awareness? What do you spotlight, and what's your recommendation?
Right now, I'm looking at it from two different angles. So the perspectives that we're looking at it from is, let's first determine what your new break-even is. The second perspective is to do a very short-term cash flow projection. Typically, we're doing extremely detailed long-term cash flow projections for a year, sometimes 3 years at a time, and those are very important. But right now, it's key to just even wrap your head around what are the next week's expenses, the next month, and then up to the next 3 months.
Beautiful.
And that's a little bit easier to work on right now than trying to tackle a whole year at a time. So I think being realistic and these short-term cash flow needs is important.
Beautiful.
With the break-even calculation, we normally calculate those for our clients on an ongoing basis. So we have the trends of what last year's break-even was, what it was for first quarter before they closed. And now what we're working on right now is updating that for just a 1 month period of time.
Beautiful. Beautiful.
Right, because we need to determine what are the new expenses. We want the old trends, but right now we really need to know what are the new expenses for 1 month at a time. And I think that's key because we have different variable costs right now and fixed costs.
That's right.
Sometimes people wonder what the break even is. So to explain that just a little bit, what the break even is it's the amount of money that you need to collect each month in order to cover all of your expenses for your overhead, including your note payment. So it's important to look at both your fixed costs, which are those that don't change regardless of how many patients you see a day, and then the variable costs, which do change based on how many patients you've seen. Right now, we're working into those costs, the PPE costs, also some of the additional asset or equipment purchases they've had to make, and then factoring in all of the changes to wages. So, you know, when you start getting into the calculation, you realize that you've had changes in so many of your expenses that you have some deferred payments you may be making right now for some old bills that got delayed, but then you've also made changes in exactly when team members have been rehired, and then how quickly you're paying them. So, you know, with the break even, I normally calculate it first as the actual true break even cost before paying the doctor anything.
Great.
And then I add to it, what are the doctor's goals?
Okay.
How much does the doctor need to be paid or want to be paid each month? And also, how much does the doctor want to be setting aside for savings and also for a retirement plan contribution? And then it's that larger number after we add in the doctor items that we then share with the team. So I never share with the team the true figure before doctor, because I think it's important for the doctor to have planned goals of what they want to be making from the practice, because we really should be in this habit of paying the doctor first and then backing into what level of production must be completed, or in this case right now, how much from loans do we need to use to then make sure that the doctor gets paid and the practice overhead is paid as well.
Yes, beautiful. So you have an actual, I mean, for your current clients, you have available, right? So
that's right.
Through that process, and they're used to it in some ways because you've actually computed that for them. If
Mhm.
if someone were to prepare this on their own, what would your recommendation be? Like if they're just going, gosh, I'm scared. How could they do kind of a simplistic version, but still have a sense of it, Kate?
What I would do in a simplistic way is first look at the fixed expenses.
Yeah,
So what costs do you know that you have to pay right now, such as your utility bills, your rent payment, or your mortgage payment, those types of expenses that you're going to have regardless of how many patients you see. I typically factor in the employee wages and even associate pay in there because usually you're going to pay them regardless of patients, but sometimes you've got people on, commission pay. So
sure.
I would start with that. And
Okay.
then what I would do is add to that your other expenses based on a percentage approach. So for instance, right now we know percentage wise, your costs are going to be higher as a percentage of your usual collections. So you might use a higher percentage.
Got
Or if you already know a flat dollar amount of clinical supplies you'll have to pay this month and the lab bills, then you could add in the total dollar amount. And the other element I would add into this calculation would be to look at the assumption that you'll have a much lower collection number. For most of our clients right now, to be conservative, we're assuming 50% of collections, but each
it.
office is a little different. But
Sure.
think about realistically, what do you think your collections would be this month? And then whatever that difference that you have between your costs and what your collections are going to be, that's the amount that you know you need to borrow from your loans, either from your line of credit, from the PPP loans, so that you just make sure you're going to be able to cover that additional overhead through some other source besides the collections.
Got you. And so if they wanted to, so that's like kind of a get by strategy. And if they wanted to figure out their break even, then is it as simple as adding those fixed and variable and their personal income that's a goal? Is it as simple as that for their break even, Kate?
It's a little more complicated when you look at those variable expenses because those are going to change based on volume. So you can
Yes.
put in some assumptions in there, but our formulas take that into account when we're doing a more detailed analysis. And then once you've determined what you think your break even should be, then what I normally do is divide that into then a daily rate or
Beautiful.
daily goal
Sure.
and also an hourly goal. So you can then, start to use these numbers to help share with the team what needs to be produced and then collected for each hour or each day. I typically find that the number of hours a day that I practice is working just to cover the overhead is much higher than anyone expects. And the team members really don't think about that much because they normally, under normal conditions, see a lot of money coming into the practice. And they really think the doctor's taking home a lot more money than the doctor normally is.
Yeah.
In normal circumstances, I oftentimes find that the practice is open until at least 3 or 4 o'clock every day just to cover the overhead.
Wow.
They're
That's
not really making
shocking.
profit till later.
That's just shocking, Kate. I mean, I can
Mm-hmm.
see how that's really helpful if I were a team member to understand that also, because it's otherwise I'm operating off of a misconceived idea about how much money is there.
That's right.
So,
And I think it helps open the team's eyes as to why it's so important to squeeze in that last patient of the
yeah, for
day, or
sure.
sometimes why extended hours are necessary, particularly under this current situation.
Yeah,
But again, you got to make sure you've got a reasonable enough calculation that you've done to make sure you're sharing the right number with the team. And of course, if there's any doubt, I would always raise that number before sharing it with the team. So you could always add in a little bit of a buffer there for some unknowns,
you bet.
just to make sure that you're being realistic with them and that you're not creating a bonus program or something around a number that's really a little too low.
Beautiful. So, Kate, you and I talked about the ease with which doctors take on budgets. And
Mm.
so, can you talk about that a little bit? Because it is a little bit like pulling teeth, isn't it, at creating budgets?
Yeah, that's right. No pun intended. I mean, creating a budget is not fun for anybody. And I find that most people don't like to be held accountable to a budget, particularly when you have the spouse working in the practice as well. And so it's carrying over into your personal life also. The way that I really look at these cash flow projections is I find them to be a spending plan, and I find that it really creates freedom if you'll think about it in that way, because knowing exactly what your expenses are supposed to be, knowing that you factored in all of your savings goals and paying yourself first, then when you have extra money in the checking account, there's real freedom in knowing that that money can actually be spent on something fun.
Yeah.
So it could be spent to now go take that extra 3-day weekend trip, or it could be used on some other investment in the practice. But knowing that you really can use that without feeling guilty, I find to be very exciting. So I think planning out in advance what the spending plan will help you know when you can invest in the practice more, when you can make certain changes with, let's say, the team, or even, buying some discounted supplies or implants because you can buy them in bulk because you know you're going to have the cash to be able to do it.
Yeah.
That gives you these opportunities. I really believe the practice is a vehicle to help the dentist achieve the quality of life they want and the income they need to support that. But the only way that's possible is if you set very specific goals for yourself, and then that way you know when you've achieved them. I mean, wouldn't it be great to be working one day because you chose to, but not because you financially had to?
Absolutely. Absolutely. I read a quote. I thought it was awesome. As I hear you talk about this, that revenue is vanity, net income is sanity, and cash flow is king. And so, when
Yeah.
I hear you, that was Alan Miltz, who said that. And I think when I hear you say having a plan is freedom, and knowing where you stand is the way to actually buy yourself more time. I mean, that's what I hear. It's like cash flow is
Yeah.
king. And so, take the time to have a plan. So Kate, I'd love for you to tell people how they can get a hold of you, because I know you can help them get a cash flow plan and more. But even if can you help them, just if that's what they wanted, is to have a cash flow plan, could you help them with that?
Absolutely. So I would be happy to help any of your clients. So they can reach me at info@twgcpas.com. So that stands for the Willeford Group CPAs. Also, we have a website, thewillefordgroup.com. That's spelled WILLEFORD. And of course, we have a lot of coronavirus information on there, as well as PPP loan information, in addition to being able to help with the budgeting. And would certainly be happy to answer any questions that your clients have.
Beautiful. Thank you so much, Kate. And thanks for being just a wealth of information for us.
You're very welcome. I look forward to talking with you soon.
You too, Kate.